Is Joe Biden here to wreck housing in a big segment of the real estate investor market, or what?
With all due respect, that's a bunch of malarkey.
No, it's not a bunch of malarkey, and I'm going to tell you why. Hi, I'm Keith Weinhold. This is Get Rich Education, the $15,000 first-time homebuyer tax credit. That's something that Biden has proposed. It's currently a bill, and in fact, it's something that he even talked about back on the campaign trail last year. This policy is wrong. It is a bunch of malarkey, and I don't have a partisan bone in my body, as you're finding out over time. In fact, I was critical of Trump tariffs as well because I didn't feel like that promoted free marketism. But getting back to Joe Biden's $15,000 first-time homebuyer tax credit, look, what we currently have is very high housing demand and really low supply. With the nature of this recession, demand approximately doubled. At the same time, supply approximately halved. We need help here on the supply side, not the demand side. So introducing a $15,000 first-time homebuyer tax credit continues to give us a greater pool of buyers that can qualify to buy property and further drive up prices and drive up demand. That's not the type of stimulus we need. We need help on the supply side. So therefore, what Biden should consider doing instead is getting rid of the first-time homebuyer tax credit and instead easing building requirements or easing construction restrictions or giving tax incentives to developers so they can come in and develop homes and start to bring up the supply side faster. That's where we really need the help. So this only knocks things out of equilibrium. If you really want to house more people, which would really be a good theme of maybe what government wants to help people out and do and promote incentives for, if they're going to be involved at all, is to help that supply side. So, I just have to wonder, maybe Biden is under the influence of back about 12 years ago in 2009 when he was Obama's vice president. Obama introduced substantial stimulus like this to first-time homebuyers. So maybe that's why Biden's thinking that this is the right thing to do because we're in a housing crisis. The housing crisis was different back in 2009. We were in the opposite condition. We had high supply and low demand. So first-time homebuyer tax credit made a lot more sense back then. Today we're in the opposite condition. Help out the supply side. You've got it wrong, Joe.
Give me a break. That's a bunch of malarkey.
Now, the bill targets low and middle income earners, and but not everybody is going to be able to get enough help to buy a home just with a $15K tax credit. In high-priced housing markets where we seem to have the most homelessness, that's where this is going to help people the least. Oftentimes, homes are selling for more than their appraised amount as well, so a buyer would need to come in and make up that gap. So really, therefore, people that are on the brink anyway, in not having adequate shelter, this isn't going to help them. And effectively, what things like this do is they increase homelessness. That's what happens as prices continue to get out of hand. So this is such a misdirected bill. And this is a taxpayer-funded bill. It always sounds nice to offer someone a quote-unquote free tax credit, but it's effectively taxpayer-funded. So how does taxpayer-funded increases in homelessness sound? There are just so many reasons why I don't like this. Help the supply side, not the demand side. Joe Biden wants to limit the 1031 tax-deferred exchange for real estate investors as well. Now, it's also known as the like-kind exchange. And 1031, that is just the code section where this is stated in the IRS. That's all that means. And it gives a real estate investor the ability to endlessly defer paying any capital gains tax. That's what a 1031 does. I'm an active real estate investor. I've taken advantage of the 1031 exchange a number of times myself. So Joe Biden wants to limit the 1031 exchange. Understand, this is something that's been around for 100 years. The 1031 exchange has existed, yes, since the year 1921. So let me give you an example, and this only applies to investment property, not your own home. Say you bought a rental single-family home or duplex for $200,000 some years ago, and it increases in value to $300K. All right, your capital gain is $100K. Oftentimes with some other vehicle like a stock or something like that, you would need to pay capital gains tax on that $100K. But a real estate investor can either pay the capital gains tax at the time they relinquish the property, and you only do have to pay capital gains tax at the time of sale, by the way, or they can do a 1031 exchange. If a real estate investor, at the moment they sell that $300K property, or somewhere around that time that they sell, if they identify a suitable replacement property at that time, typically a larger property, they can roll that 100K gain in and say put a 20% down payment then on a 500K property and pay zero capital gains tax on that 100K. Capital gains tax rates are currently between 15 and 20%. And also, when you sell a property in that 200 or 300K example that I just gave, you need to pay depreciation recapture as well. But a 1031 exempts you from both those things, capital gains tax and depreciation recapture. Now, Joe Biden wants to increase the capital gains tax on the highest earners from 20% up to 39.6%. So that would really hurt people. A 1031 saves you from that currently. Before I tell you more about how Joe wants to limit the 1031 exchange, understand that for owner-occupied property, your primary residence where 1031s don't apply, you currently are exempt from paying capital gains tax when you sell that of up to the first 250K if you're single. And if your gain's up to 500K married, that entire portion is exempt from capital gains tax. That's the primary residence capital gains tax inclusion. Now let's get back to the 1031, where we're talking about income property only. What Joe Biden proposes to do is limit the 1031 exchange amount to 500K, saying the first 500K of an income property gain would be exempt from capital gains tax, and that's all. Anything above that would be subject to capital gains tax. You got to think about what this does to a real estate market. You have to think about the fact that now real estate investors would be more incentivized to do smaller deals like rentals, single-family homes, duplexes, triplexes, maybe up to fourplex buildings, but not much greater than that depending on the market that you're in. Because think about it, if you own a $10 million apartment building, well, it's very easy to get a 500K capital gain there. That would only be a 5% gain. And again, anything greater than a $500,000 capital gain would be subject to the tax. That's the 1031 limit that Biden wants to impose. So what this could do is increase demand in already a hot market segment, single-family homes especially, duplexes, triplexes, and fourplexes. And for 5+ unit apartment buildings, it could stunt their appeal. It could slow their price growth. It could slow their value because now the bigger the property you own, the greater proportion of a capital gains tax that you are going to have to pay when you relinquish the property, since you can only exempt that first 500K of a gain. Hey, if you're getting good value from this, go ahead and put a like on the video. I'll know that that does not mean that you like the 1031 exchange. It's that you like the material in the video. And I'd love to have you a subscriber if you think you're getting good value from what I dish out here. So when you subscribe, I learned you also have to click the notification bell. Otherwise, you won't know that I have a new video here for you. So if Biden does get his way and he chooses to limit the 1031 tax-deferred exchange and say it becomes effective June 1st, 2022, just say that would end up happening, for example, that would create a selling frenzy. A lot of people would want to sell their property so that they could do the 1031 exchange under current rules where there is no exemption or there is no limit of 500K at all. Currently, you can sell a building and get a $20 million gain and pay zero capital gains tax on it if you go ahead and roll that forward. That's the kind of selling frenzy this would create if people know that these limits and taxes are coming. And this could be a great boom for agents, by the way, because a lot of properties would be trading hands. So a lot of people, if this ends up happening, are going to be thinking, I need to sell some properties just like it's going to be my last ever 1031 exchange. So what they're going to do, since it'll be their last ever 1031 exchange, they know that they don't have to pay any capital gains tax on their gain if they roll it ahead, is they're going to buy a replacement property with the thought of holding onto it for a really long time. Therefore, it might make it a little more likely that they would buy a newer property rather than an older one. Currently, you might want to buy a building built in 1950 and knowing with the capital gains tax exemption that you effectively get with the exchange that you can weather that 8-year hold period and not have to do much remodeling. That's changed. People might want to buy a newer building because they might want to hold it for 20 or 30 or 40 years. So it really reduces the liquidity in the market, especially for bigger apartment buildings. So short term, if the 1031 tax deferred exchange is limited like this, it actually brings more liquidity onto the market as investors rush to sell their property and do their last 1031 exchange. But over the long term, it has the opposite effect. It limits liquidity because people will want to to hold on to their property because they won't want to sell it, or else they'd have to pay capital gains tax on the majority of the gain. So those are the effects if this Joe Biden bill goes through. I sure hope it doesn't. Previous presidents have proposed it before. I hope it doesn't go through just because I am a real estate investor. In summary here, the $15,000 first-time homebuyer tax credit is the wrong incentive because it helps the demand side. We don't need help on the demand side. We only need help on the supply side. And the second summary takeaway is that the 1031 exchange reduces the liquidity of larger apartment buildings. Hey, if you want to know more about how the 1031 exchange works, I really go into detail with a full podcast episode on Get Rich Education Podcast, episode 143. What are the things that you need to look out for? What are the things that you need to know before you even sell and relinquish a property, before you even go identify the replacement property? That's on the Get Rich Education Podcast, where I'm with you every Monday for a full show. Check out episode 143. Download the Get Rich Education Podcast anywhere you listen to podcasts, or even download the Get Rich Education phone app. We have phone apps so you can listen to the show there as well. I'm Keith Weinhold. Thanks so much for stopping by.
People say live below your means.
Below your means?
And Bassick deals.
That's like Bonds bunting. That's like Brady retiring after college. Or Beyonce quitting after Destiny's Child. That's like flying all the way to the moon without walking around on it. That would be like Enter the Wu-Tang 3 Chambers. Or the perfect triple axel without sticking it. Expand your means.